Hi, this is Alessio. Hope you're well, and welcome to a brand new update on the markets. In this video, I want to take a look at this extreme market move on the financial market, something that has actually not happened for a very long time, as I'll explain to you why in a few moments, and what could potentially happen next. Guys, without a doubt, what's been happening over the last few days in the financial markets and the stock markets has been absolutely nothing short of insane, or extreme, to put it another way. This extreme market move in the markets is one for the books. I think it sets a record, and I'm going to explain to you what could potentially happen next in this video. Before I do that, though, let me give you some context. First of all, let me be very clear. I did not anticipate such a massive crash or drop in the stock market. It is true, over a week ago, I said in my video that the markets were overvalued, overbought, and over bullish, and therefore I was not interested in buying into the stock market because essentially I was waiting for a reversion to the mean. I was waiting for a pullback to the averages. And guys, let me tell you, this is not just a pullback to the averages. This is way beyond the averages. So I got to tell you, I did not anticipate such a massive market drop. And certainly, let me tell you, what really took me by surprise was the drop below 3,000. Because I was looking at the stock market, and when I saw the market breaking below 3,000 on the S&P, I was thinking to myself, wow, I did not see that coming so fast. Usually you see retracements like this over a period of weeks or maybe months, but not in just a few days. So that's really what makes this drop one for the books and one for the records out there. Anyway, so that's the first thing I want to say. The second thing I want to say is this, that a few weeks ago, it was the beginning of February, I think, I spoke to one of my relatives and I said to him, listen, you might want to take some profits here when the S&P hits 3,300. You might want to take 50% profits here. Why? Because I showed him this chart. Let me show this to you. This is the chart I showed to you a few weeks ago, if you recall, in one of my videos. And it's the Option Speculation Index, courtesy of Jason Geppert of Sentiment Trader. And guys, this, beyond doubt, proves that we were in a bubble. And just take a look at this. Option Speculation Index had gone to a record extreme not seen since the dot-com ages, not since the year 2000. And we know what happened in the year 2000, of course, after the dot-com bubble burst. So you can see what happened there, guys. As the market was edging and edging higher, people were piling in to options. This can explain much better what's been happening in the stock markets and why it dropped so significantly. You see, guys, what's been happening is a lot of people have been piling into the stock market, essentially with leveraged call options, buying leveraged products to essentially trade or invest in the stock market. And what happens is this, because call options and option trading is leveraged, so when you're buying leveraged products, you're borrowing money. All right, so you're borrowing money from your broker. You're essentially trading on margin. So when the market suddenly dropped like it did about a week ago, what happens? You're going to get margin calls. And when these folks get margin calls, your broker is calling you up and saying, hey, you better pay up. So often what happens when you get margin calls, you can't pay up, so you have to sell. And when you sell, what happens? The market goes lower. And what happens when it gets lower? Well, that triggers more selling. Why? Because you have algorithms designed by institutions that are programmed to sell when certain levels in the markets get hit. When those algorithms start kicking in, they start selling even more. All right. And that causes more selling. So, selling causes more selling and so on and so on. And by the way, don't forget, guys, you have short sellers coming into the market. So you got short sellers selling in, selling rallies into the markets that causes even more selling and so on and so on. And eventually when people panic and sell, what happens eventually, guys, is that when everyone has sold, there's nobody left to sell. Well, that opens demand. And so what happens is people who've been waiting for a drop in the stock market start buying in to the stock market. So that's the real explanation, guys, as to what causes these massive drops in the stock market. It is not what you hear in the news as to the virus causing the market to crash. That has absolutely nothing to do with the real reason as to why markets drop like this. Now, of course, if you're watching the news, it's very easy to correlate the virus story to the drop in the stock market. But remember, guys, correlation is not causation. So let's now continue to the next part. What could potentially happen next here in the stock markets? I need to show you something very interesting. Firstly, on the 4-hour chart of the stock markets, take a look at this. This is the 4-hour time frame. We're seeing an acceleration extreme. I have here a red acceleration extreme signal here. There it is. I haven't seen one of these for a very long time. In fact, the last time I saw one of those was in a daily chart time frame. I'll show you that in a few moments. As you can see here, this is the last time I saw one of these red acceleration extremes on the stock market, on the S&P. This was back in December of 2018. There it is, right there, as you can see there in my chart, showing to you objectively that the market's overstretched beyond extreme levels. All right, guys. By the way, that's not even the most extreme signal. We have also a purple signal, which is even more extreme than the red one. But look what happened here. When we got that extreme red acceleration extreme in December of 2018, look what happened afterwards. A major extreme market bounce, as you can see right there. So going back to our chart here on the S&P, we do have a red acceleration extreme here now on the 4-hour chart of the S&P. I would have preferred a daily chart time frame signal, but it is what it is. It's all we got. So that is showing to us, guys, that there's a high probability now of a potential market bounce. And now I want to bring your attention to another very important indicator about the stock markets. By the way, I got to give credit to my good friend Charlie Burton, who mentioned this to me on Friday. In fact, Charlie said in one of his videos last week that the McClellan Oscillator has gone into extreme levels, record extreme levels not seen since for a very long time, as you can see right there. Before I explain to you the McClellan Oscillator reading here and what it means. First of all, this indicator was designed by a guy called Tom McClellan, who is this gentleman you see here. And here's what McClellan says. He says that we have not seen, he says, all-time low for the McClellan Oscillator was October 10th, 1932. The level was minus 176. So the one we got, by the way, the one we have now on the McClellan Oscillator is, it's not that far away. It's minus 136, and it certainly is a very extreme low for this oscillator. We haven't seen something this low for a very long time. The last one was in 2019 or 2018 it was. There it is. I think it was December 2018. The one before that was February 2018. Let me show you exactly what happened when these extreme signals on the McClellan Oscillator occurred in 2018, February 2018, and in December 2018. And as you can see, guys, right now we are below those record extremes. So take a look at this chart over here. So as you can see here, guys, in February of 2018, we had a massive market drop. And this is where the McClellan Oscillator gave that extreme reading. And look what happened afterwards. Major market bounce. Major bounce on the stock markets there. And now if we go to the next signal that we just saw on, I think it was December of 2018. There it is. So obviously that was near Christmas time, 2018. Major market drop, as you can see there. And by the way, that is also the point where I saw my signal trigger. There it is. That's the same one that I just showed you before when I got that red acceleration extreme on the stock markets back then. And you can see what happened afterwards right there. That was also when the McClellan Oscillator gave that extreme reading, bounced, major market move up, as you can see there. So what does that mean? It means, given everything we just saw in this video, given the McClellan Oscillator readings, the acceleration extremes, the fact the market has dropped down to some important support levels, this means now there's a high probability, I would say about an 80 to 90% probability as we head through the next days and next few weeks of an extreme market bounce. In other words, I'm looking for the market here to find a floor here and essentially to see an extreme bounce similar to what we saw in 2018. Something that might look like this, for example. And the levels I'm looking for it to bounce to, at a minimum, I'm looking for a move up to the 21 daily moving average, this blue line you see here. Often after extreme market moves, we see a pullback or a bounce back to the 21 daily moving average. So that's really what I'm looking for, a bounce back, an extreme bounce perhaps back to the 21 daily moving averages and perhaps to fill some gaps here on the chart. All right, guys, hope this video helps. If it does, please give it a thumbs up and also please subscribe for future video updates. Thanks very much. Bye for now.